Let's get to our guest host this morning, Tom Farley, Farpoint Acquisition CEO and former president of that other New York Stock. Have you been here before?
I've been here once before. This is definitely the away field for me. I was just like picking my way through the Brazilian IPO arrayed outside, giving bom dias, and I wanted to say, welcome to the New York Stock Exchange.
Right. Tom is a CNBC contributor. You don't need to be that way anymore, though, right? I mean, I know you were there for a while. But
I think, look, like Reggie Jackson said once you wear the pinstripes, you always wear the pinstripes.
Yes.
So I have a certain allegiance to the big board.
So you weren't getting out of there just in time as the NASDAQ basically takes over the entire world of trading? That's not why you sort of...
No, I got out of there because there was somebody better to take my place in Stacey Cunningham.
Okay. But you don't feel allergic here? You're not itching or anything?
No, it's a little awkward. I think it's more Adina seeing me on the guest list here probably isn't thrilled about it. But all kidding aside, the competition between those two exchanges
It's great. And we talked to her yesterday. She feels like the NASDAQ's in a great place. So
they are.
And competition is good. Both exchanges can win.
They each have their niche. NASDAQ does a lot of IPOs. They tend to be slightly smaller. NYSE does fewer, but the larger IPOs really tend to be the better companies, not in all cases.
Well, let's tap your expertise on some of that, just with IPOs, because with the market volatility that we're seeing right now, what does that make you think about what it means for the IPO market?
It's going to slow down. It happens every single time. It happened back in February. We saw a lot of IPOs push. Remember the wild volatility in February? Go back to, I think it was March of 2016, the European issues when volatility spiked, the IPO market shut. The big question will be, in fact, it'll be a little bit about today. Right. Does the volatility of yesterday continue? Because if you see a couple days of volatility, people will just shut it down for the year.
Do you feel more or less angst when you see days like yesterday? I mean, at the big board, you must have looked at that and you had to hope everything goes smoothly, and there's a lot of turbulence, and you hope the exchange performs the way it's supposed to exchange. But now you've actually got money in the game, right?
Yeah, well, when I was at the big board, I had to worry about, are the systems going to support all this?
Now you're worried about maybe your own money or your...
Exactly. I don't feel a tremendous amount of angst. I don't want to be cavalier, but look, markets have these pullbacks.
Don't say garden variety.
This year,
I stopped saying garden variety. Correction. I stopped saying that because I think it makes people too complacent. But that seems to be what you're saying right now.
Yeah, I don't want your viewers who woke up this morning, they checked their investment accounts maybe for the first time in a month because they read the news stories, to say, oh my gosh, this is the end of the world. I want to go sell my stock.
Well, I mean, just volatility. Back in February, we hit 40 on the VIX. Yesterday, we never even officially hit 25. So that type of volatility, does it really pull IPOs from the market? Is it 25 sustained for a little while, or what's the relative volatility you have to see before people pull?
It absolutely will impact the IPO market. 25 is actually a big number. You'll hear commentators say, oh, well, 25 is actually the long run average or near the long run average. But if you look over the last 10 years, 25 is a really big number. In fact, this is as high the volatility has been really, other than those two instances, going all the way back to the financial crisis. So there have already been IPOs pushed. I've kind of talked to some of my colleagues at the NYSE or my former competitors here. And then there'll be some big bellwether IPOs that are kind of hoping to go this year, and it'll be interesting to see if they do or if they push. I suspect they push.
It was interesting last night, though, one got priced. Yeti, the cooler company at the New York Stock Exchange, which had withdrawn its IPO.
Cooler than what? The other? There was another one that was less cool. Oh, cooler. Oh, okay, I get it.
Really fancy.
Yeah, I got it.
It didn't price particularly well.
No, it didn't.
And that will be a signal. That will be a signal for other IPOs. If you want to push ahead, you're going to end up below the range. You're going to end up downsizing.
You're going to end up looking like you needed to do it, not like you wanted to do it.
Yeah. So that's why people will push their IPOs until January, February. Yeah.
Hey, Tom, here's a question I asked Adina Friedman, who was with us here yesterday. All of these big unicorn companies that we've been hearing may come to market early next year. If they want to hold off because of the market volatility, I just wonder, is there any pressure on them at some point to actually make sure you get public before liquidity really dries up in these private markets? And by the way, some of them are so big, it's hard to imagine another round of private financing.
Yeah, not really, because you're referring to Uber, Airbnb, Palantir, Pinterest. They don't have to do anything. They don't feel pressure. I met with Dara in his office the first week or first day he took the office, and that guy didn't seem the slightest bit pressured. He said, we're not going to rush the IPO. We're looking end of 19. Nothing has changed. They may accelerate it earlier in 19. So they don't feel a lot of pressure. But the medium-sized companies who actually need the financing, they should feel pressure.
Yeah.
They should be accelerating their IPOs because the IPO window, there's no, like, it's not in the Constitution that the IPO window is always wide open. It can clamp shut like it did after Facebook for 18 months, and they could be in a good deal of trouble.
So is the head of the bastion of capitalism when you were at the New York Stock Exchange, and we've talked a lot about the sort of the new normal in terms of since the election, and you were early on pretty excited about the possibilities of less regulation and lower taxes. Is it's a lot of it's come to pass, wouldn't you say?
Yes, it's been good since the election. If you look at the S&P, it's up 25% since the election, and I think that in large part is because of the pro-business policies. But let's be candid, since the tax cut, the market's flat, and we still have a big question, open question about China. I'm not backing away from our prior conversations, Joe, where I said, look, somebody had to do something about China. I still feel the same way, but it is very unclear to me exactly how that resolves itself, and that's a big risk. That's a big risk.
And having watched stock prices for years and years and years, who knows, so they're flat since tax reform.
Yeah.
I mean, they probably went up in anticipation.
Yeah, it's up 25% since the election.
Things, who knows where, I wouldn't even venture a guess by the end of the year where the stock market is right now. In other words, we're flat now or down. What is it? It's mid-October. By November and December, after the election, you could still see us regain highs, or, I mean, I'm not convinced that we end down for the year in 2018, are you?
No, and I think we're still sitting in a very good place. I think the policies that we've put in place over the last year and a half have by and large been the right policies from a business perspective. I think the economic numbers are as good as they've, quite frankly, ever been, but there's concerns. China, how that's resolved, the Fed, how quickly they raise, and then the rest of the world, frankly, it just doesn't look quite as good as we do here in the U.S.